Did you buy any shares in the 37 billion blockbuster IPO of Ant Group? Probably not, as the world's biggest IPO got halted by the Chinese government. Good morning, everyone. This is Mark from Payment Genes, and today it's all about payments. The Chinese payments landscape is getting more interesting every minute. Last week, the Chinese government surprised us with the suspension of Ant Group's IPO listing. For the record, Ant Group, formerly known as Ant Financial, is by far the highest valued FinTech across the globe. According to Wang Wenbin, China's foreign ministry spokesman, the suspension aims to better maintain the stability of the capital markets and to protect investors' interests. They expected it would impact public markets with a rumored collective 2.7 trillion chasing the Ant Group IPO, which could have set an IPO record actually. Some retail bids even came in at a value of 870 times more than the actual share price on offer. Ant Group, the parent company of Alipay, filed to go public back in August. Yet the suspension came just 2 days before the shares were going to go live on the Hong Kong and Shanghai stock markets. So why and how did the suspension actually happen? Chinese regulations on non-bank financial companies have tightened with increased scrutiny practices regarding licensing procedures for financial holding companies that might include capital requirements. Essentially, these new regulations indicate the government's intentions to limit the power of fintech powerhouses and to get a grip on how payments flow across the whole ecosystem. Authorities are now setting their sights on Ant's biggest source of revenue, which is its credit platforms that funnel loans from banks and other financial institutions to millions of consumers across China. Ant's lending businesses not only generated 40% of its sales during the first half of 2020, but it also accounted for 10% of all consumer loans in China, the Financial Times report said. Ant Group in turn has been outsourcing the risk using partner banks to issue the loans and then reselling them later as securities, retaining just 2% of these deals on their own books. Therefore, they are probably not meeting the renewed capital requirements. Interestingly enough, the halt follows the recent successful trials of China's digital currency, suggesting that governmental involvement in financial services is increasing. In addition, the government is trying to close the gap between themselves, incumbents, and the high-growth fintechs such as Ant Group. So, do you think China handled correctly by halting this IPO? And how do you see the future for Ant Group after this IPO has been halted? Share your thoughts down in the comments below. I thank you all again for watching, and I'm looking forward to see you all again next week. Cheers, bye-bye!